Good morning, students. Our today's topic is ledger. So, now what is ledger? Ledger is basically a book of account which contain a particular transaction of both, that is debit and credit. Let's discuss in a very simple manner. Now, for example, if I ask you your balance of cash, so since you have recorded these transactions in your journal entries, so what you will have to do is you will have to go through all journal entries to find out cash balance. But it will be a very lengthy procedure, it will be a very time taking procedure. So to avoid what you can simply do is you can prepare ledger account of that cash balance. So whenever I'm asking you your cash balance, you'll just check cash account. You don't have to go for checking total journal entries that you have recorded throughout the year. You just need to check the cash balance, that is whatever transactions have taken place in cash, you have already recorded them into your ledger account. So that's what basically ledger is. So we can simply say that a ledger is a classified and summarized information from the journals. So it just always remember that ledger is prepared only after preparing journal. That means as soon as we prepare journal to check any particular account, we can have ledger account. Or we can also say that I have so many customers to whom I sell goods on credit. Now all those customers are recorded in journal. But if I want to check the account of particular customer, so in journal to I have recorded all the customers at one place. But when we talk about one particular customer, to check that one particular customer, we can check his account, that is through ledger account. And that is why ledger is prepared. Now, as we already discussed, that ledger contains both debits and credits. Whatever is debited, that is also recorded through ledger. Whatever is credited, that is also recorded through ledger. So ledger account will contain both debit and credit. Just we used to have in case of journal, but in a different manner. So first of all, let's discuss the format of ledger accounts. So the format, as you can see here, is date, particulars, JF, amount. This is for debit. Then on half page you can see again date, particular, JF and amount. So the left hand side half is containing debit side and the right hand side half is containing credit side. So in total we have half debit and half credit for transactions recorded in case of ledger. Now you can see here date, though you have already been discussing that every transaction need to be recorded date wise. Particulars, fine. JF. So here, if you remember, I told you in case of journals that we'll have to write a column of LF, that is ledger folio. Here we are writing JF, which stands for journal folio. Now let's break the mystery of LF and JF. So students, as I told you that ledger is prepared after preparing journal. That means in case of journal, we give a number which is called as ledger folio. That means while passing ledger, we'll refer that LF number in case of ledgers. And here we write JF. That means from which journal we have taken this ledger from. And that is why while preparing journals we write LF, that is ledger folio, and while preparing ledger we write JF, that is journal folio. So you can see here, here we have written a small dr, that stands for debit, and here we have written a small cr which represent credit. Now, while preparing ledger accounts, we simply write, as I already told you, that half page is for debit and half is for credit. So while writing ledger, at the left hand side we write it is debit column, and at right side we write that it is credit column. Now let's start discussing a particular question. Question I already have sent you, so I'll directly go for journals and ledgers. Okay, from that question you can see, now I'll not be explaining journals to you all. As you can see that first entry we have written cash account debit to capital account, then bank account debit to cash account, then purchases account debit to cash account. Okay, here you can see that we have written total. So always remember, whenever we change the page in case of journal, we take the total also. That means while closing one page in case of journal, we take the total, we write it down at the end with balance carried down or balance carried forward. That is total C/F, which stands for carry forward. Now you can see on the next page, we'll start with that balance first, which is total B/F, that is brought forward. That means total which we have taken from the previous page. It is balance brought forward. So here also you can see the journal is Cartage account debit to cash account, Lara India's account debit to sales account, cash account debit to Lara India's account. So these all are the journals we have recorded. Now if I ask you to prepare ledger of cash for me, first of all. So what you will do is, you'll see first of all in the first entry, you have debited cash account. So you will prepare a cash account. And how will you prepare a cash account? You will prepare a cash account and writing here that on December 1st, cash account was debited and capital was credited. So since cash is having debit balance, so you will go to cash card debit side but not write the name of cash itself. Name will be written of opposite party. That means cash is debited through capital. So here we'll write to capital account. In case of journal, debit is represented through to, and here in case of ledger, credit is represented through by. So we will write here to capital account 1,20,000. Moving towards the second journal entry. The second journal entry we have is bank account debit to cash account. Now here you can see that cash is going out and hence it is being credited. So we'll go to cash ka credit side and we'll write here is by bank account. We'll write here by bank account, as I already told you that whatever cash is happening, if it is happening debit, if it is debited, we'll write at debit side, and if it is credited, we'll write at credit side. So since cash here was being credited, so we have to write at credit side but the name of debit. So that is by bank account. Next point we have is in case of journal, purchases account debit to cash account. So here purchases is debited and cash again is being credited. We are just preparing cash account here. So in case of cash account, here we'll write by purchases account amount. Then next we have is cartage account debit to cash account. Here also cash is being credited by 500. So we'll go to cash ka credit side and we'll write by cartage 500. Then moving towards the next, Lara India's account debit to sales account. Here we do not have any entry for cash. So this transaction will not be recorded in cash. At the same point, The next we have is cash account debit to Lara India's account. Now here cash is coming into the picture. So here since cash is coming into the picture, we have to see in the picture which side it is coming. So it is coming at the debit side. So we'll have to write at the debit side of cash account to Lara India's say account 10,000. Again we have sales return account debit to Lara India. Again, cash is not here. Will not write it down. The next point we have is trade expenses account debit to cash account 700. Here since cash is in the credit side, we'll go to cash account credit side and we'll write buy trade expenses 700. The next we have is purchases to Tarannum. Cash is not neither debited here nor credited here, so we'll ignore this. The next entry is bank account debit, discount account debit to Lara India's account. Here we do not have any cash. It is bank, not cash. So we'll not record in cash. We'll move towards the next entry. Tarannum's account debit to purchase return account, no cash. Next we have a stationery account debit to cash account. Since cash is credited here, so we'll go to cash and we'll write buy stationery account 1200. The next we have is Tarannum to bank, no entry recorded in cash. Rent to bank, nothing to be done with cash. Then drawing account debit to cash account. Since cash is credited, so we'll go to cash ka credit side and we'll write here buy drawings account, that is 10,000. The next we have is cash account debit to sales account. So since cash is debited here, we'll go to cash account debit side to sales account 12,000. And the last we have is Rupak Traders to sales and Rupak Traders. We do not have any cash card transaction here, so we'll not record this into cash. Now, if I ask you what is your cash ka balance, so what you simply have to do is you simply have to calculate your cash card debit balance, that is 1,20,000 plus 10,000 plus 12,000, that comes to 1,42,000. That means at the debit hand side you have 1,42,000. Okay, so now moving towards the credit side, you can check here the total is 40 plus 12, that is 52, 62, 63, 64,400. So now as you can see here, at the debit side the total was 1,42,000 and at the credit side the total is 64,000 sorry. Yeah, so here the total was 1,42,000 and at the credit side it was 64,400. So you can say that the cash balance available with you is 142 minus 64,400. That will be 600 and 13 minus 6. That is 67,600 will be your available balance of cash. So this is how you can simply calculate ledger accounts. So hope you can solve the next points. Please stay home, stay safe. Thank you.